adaptation venue, in which people are really dealing with day-to-day needs and day-to-day action, and try to bring that in connection between the two worlds. So the Resilience Hub was created not only as a physical venue at COPs, but also as a virtual venue. And that virtual venue has had great traction over years. It has become a virtual space that continues over the year, not only stays for the COP. During COPs, the virtual venue has attracted around over 20,000 people during the 2 weeks of COP, just engaging on content. We have made the effort of bringing top-notch AV and IT support, like today, for example, but with cameras and creating a lot of content, but also allowing for live streaming in the best quality possible so people could access that information. It's no exception this year. This year, we're going to be in our 4th year in a row going to COP. But this year was a bit different because we decided to try something else that we haven't tried in the previous year. We decided to spread the love of the Resilience Hub throughout the year. So we launched the hub in the at London Climate Action Week this year in June. And then today is our second stop. We're going to stop at CBD COP in Cali, Colombia, and then we'll land at COP29. And we hope to see you today engaging. We're going to have excellent panels. But before moving to the panel, I just wanted to thank the organizations that have been with us with the hub all throughout. So I forgot to introduce myself first. So I'll go last. So you can see the organizations, and then I'll come last. The organizations that we have are, of course, the Global Resilience Partnership that it's hosting a session today in the afternoon. But we also have, and I want to read them to not forget any of the, I know the acronyms, but not the names completely. So the International Center for Climate Change and Development, ICAT, based in Dhaka. Slum Dwellers International, SEI. Climate and Knowledge and Development Knowledge Network at South North, CDKN SSN, and Fundación Avina. And of course, a Global Resilience Partnership, as I said. And my name is Jorge Gastelumendi. I'm the Senior Director for the Adrian R. Rockefeller Foundation Resilience Center at the Atlantic Council. So Atlantic Council is an organization that I've been partnering as a founding manager, co-manager of the hub since 2021. And without further ado, I'm going to move to the action. So I keep saying, I've been part of the negotiations. I've been a climate finance negotiator for the Paris Agreement for Peru. I'm Peruvian originally. And the claim, which is extremely valid in the negotiations, not here, we're not in the negotiations, but in the negotiations is that there is a problem that has been created by X, and then Y is suffering from that problem. So how come there is no more recognition that X should be paying for the problems that they have created to support Y on their efforts to overcome the problem that was created by X? I haven't mentioned names. You could put whatever name you want on X and whatever name you want to put on Y. But that's a claim, and that's the way the negotiations have been organized, and that's where some of the victories have been achieved, like creating the Green Climate Fund or creating the Loss and Damage Fund, or now the negotiations about the new collective quantified goal. So that's applied there, and that's what happens there. But in reality, the amount of money that will ever be created by that effort will never be enough to address the climate crisis. And as a former and current, well, it's a champion for Egypt, keep saying, we had a task that wasn't simple, but was very straightforward. We had a first layer of protection that was mitigation. We had to reduce emissions to a point in which it wasn't dangerous. As a second layer, we had adaptation, and we had to, if we failed that first layer, we needed to adapt to climate change. And we have been trying and will keep trying, but if we fail on that one, we have losses and damages. So here, in this conversation today in the panel, we're trying to identify in that context what can be done given that we have failed, unfortunately, in that first layer of mitigation, and we'll need to keep trying and we'll need to keep fighting, but in that second layer, what else can be done to overcome the challenges of channeling resources, more financial resources towards climate adaptation, towards communities, towards biodiversity, finding solutions towards that. Without the engagement of all of us, and not only this political negotiation of the negotiators in which we are looking at X and Y, without other efforts that need to happen in the space of financial resources, being that public, but most importantly, private, and with engagement of communities, and with social justice and equity. All of those elements need to go together to solve this transition towards a world that is going to be quite different to the one that we live right now. And so the panel today is trying to address this. You know, it is no coincidence that the amount of money that is going to adaptation is limited. And the reason why is that is because as a financial system being that comprised by both public and private, we haven't yet figured out a way to internalize climate risks into our decision making in every single decision that we make on a day. Not only for climate change. You know, how do we produce an iPhone? How do we, you know, decide whether we're taking the subway or building a new line of subway or building a new highway? Those decisions that we make on a daily basis need to internalize climate risks and climate costs. And until we don't do that, it's going to be really hard to have enough resources to adapt to climate change. Here in New York, or being that in Dhaka, or in Lagos. So this conversation today is trying to tackle that in this panel, to show how actors across the financial system, actors from community organizations, are looking into internalizing risks and creating ways in which we can address that by making it part of the economy, as opposed to having something between X and Y being discussed only. So I'll challenge you to think about that. I'll challenge you to think throughout this conversation how the system, the financial system, should be looking different to what we have right now. And what else needs to happen for us to fully internalize climate risks into our decision making. So with that, I'll leave it to my colleague Nidhi Upadhyaya, who's going to open and moderate the panel. And thank you so much for being here. This is a dream come true, to be seeing all these, you know, friendly faces coming together, trying to solve an issue, but most importantly, bringing the actions and finding solutions so we as a community actually could have something to give back to those that suffer the most. So thank you so much again. Welcome to our Resilience Hub. See you later.
Thank you, Jorge. It's such a pleasure to be here with all of you, and thank you for making it out at 9 a.m. on the first day of New York Climate Week in New York. So without much further ado, I know we're short on time as well. I just want to jump right into the conversation with our lovely panelists. So our panel discussion today is going to look at the crucial role of the insurance industry, as well as investors on climate adaptation solutions, integrating innovative investment structures for nature-based solutions, and highlight financial and market innovation that can build resilience. So I am very delighted to welcome Amy Barnes, Head of Climate and Sustainability Strategy at Marsh, and member of Marsh McLennan's Climate Group. We have Francis Hyatt, Executive Vice President and Chief Sustainability Officer at Liberty Mutual. We have Anjali Viswamohanan, Director, Policy of Asia Investor Group on Climate Change. And then we have Sophie Javers, Policy Engagement Partnerships at Feed the Future MRR Innovation Lab. So thank you all for joining us here. And we will turn first to Amy. Marsh is the largest commercial insurance broker in the world. And over the past few years, you and your sister company, Oliver Wyman, have been quite active in helping to define the role nature plays in understanding a company's physical and transition strategies risks. can you tell us about what you're telling your clients in the real economy about the role that nature plays? So we're going to kick it off with nature here, but we'll go into other strategies, other infrastructure details as well. So over to you, Amy.
Thank you, and delighted to be here, so thank you for the opportunity. I think it's fair to say, my role is global, and we see a lot of the interaction with thinking about climate and nature driven by reporting, and a lot of that reporting is coming out of Europe. I'm sure most people in the room are familiar with CSRD and the EU deforestation regulation that's coming. And so that's driving action from a lot of players. However, reporting isn't acting on the issue or addressing some of the challenges. Rather than start talking about how people are managing their own assets, I thought I might spend a few words talking about ecosystem services, first of all. We're seeing clients that have a direct relationship with ecosystem services, such as agriculture, people in food and beverages, are very alive to the risks that they're facing. And some of the advice that we're giving our clients are thinking about changing their strategies. A client in Italy that produces a food product realizes they have to change their marketing strategy. They won't be able to say made with 100%, whether it's durum wheat tomatoes made from Italy. They are going to have a more geographically diverse manufacturing base going into the future. We see companies with agri in the supply chain thinking about how they support workers. So you may have seen in the press the work that one of the companies that we started 10 years ago, Blue Marble, is doing with Nestle. So I don't drink coffee, so I didn't realize that Nestle owned Nespresso. So when I was talking to the risk manager of Nestle and explained it to him, I felt like a complete idiot. However, you probably all know about Nespresso. So Nespresso was very worried about the security of supply of cocoa beans, given the climate challenges their farmers are facing. And so with a micro-insurance company that we co-founded, they have put in place insurance for those farmers. So if there is a bad crop, those farmers don't have to move to urban areas. They can afford to live throughout the year, to grow crops again. And there's just been another policy program set up in Indonesia. And we're talking to many more people with agri-supply chains around supporting the workers who are dependent on nature and ecosystem services. But we have a lot of clients who aren't aware of their dependency. So one of the statistics, again, many of you may be familiar with, but that blows my mind, is that for the past 3 years, the Taiwanese government have been paying rice farmers not to grow rice so we have enough water to make semiconductors. I suspect most people with a semiconductor dependency, anyone really with any technology manufacturing, isn't thinking about that nature-based dependency throughout the supply chain. So there's a huge amount of work educating and identifying the risks through the supply chain. But we're also seeing some consequences of actions taken. One of our FMGC clients, I was speaking to their, just what a great job title, Head of Flavor Profile Mint. I never knew I wanted that job until I heard about it. Maybe I'd take citrus. So they moved away from chemical mint, as people said in their toothpaste they wanted natural mint, but they then had a negative impact on their water consumption, their carbon footprint. And so moving to what we may think of as a better outcome, having negative consequences that they're now struggling to manage. So there's a lot of work on ecosystem services. If we then start to think about owned assets, and you rightly introduced me from the insurance and risk industry, we do not see companies or insurers asking any questions about sponginess or porosity when new developments are being made, whether it's on a greenfield or brownfield land. And so I'm not able to say to a client that sponginess or porosity in your hard infrastructure, we know that that will improve the risk outcome. I can't tell people that that will also have a positive financial impact on how we price risk. We've also got the prisoner's dilemma, which was set at the front, that often the person that we need to make the intervention to improve the nature-based resilience isn't the person that benefits from that. So how do we resolve those issues, and how do we make sure that the rewards and the costs are shared equally? I'm very conscious of time, but some other insurance things that I think it's just worth making people aware of how we're thinking about nature impacts are, in the UK we do have a legislation called biodiversity net gain, where anybody building, whether it's brownfield or greenfield, has to increase the biodiversity value of a site by a minimum of 10%, and for some ecosystems types it's harder. And they have to maintain that improvement for at least 30 years. And ideally you improve the ecosystem on your own site, but if you can't, you have to do it somewhere else, and then you have to do more than 10% if you do it elsewhere. And so we're developing insurance products that can make sure that there are the systems and the infrastructure and the funds available to make sure that biodiversity net gain is maintained. Likewise with the habitat banks in Colombia. So there are some positive issues, some positive things happening, but at the moment I think a lot of it is awareness raising, both for people's own assets and through their supply chain.
Thanks, Amy. And then just to add on to that, you've done some recent research on how your clients view the urgency around their role on in climate adaptation, particularly at the systems level. Can you shed some light on it?
Yep, thank you. So when we think about resilience, a lot of people start thinking about their own asset. But even if as you think about your own asset, it's more than your asset. You need to think about your operations and people. Do I need to change my inspection and maintenance regimes? Can my workers work in the way that they have been? And also the emergency response. Can you respond to an emergency, whether it's climate or not, in the way you expect it to in the face of climate change? Will you still have access to emergency fire water, which we found in the Maui fires they didn't have? So I think people are growing their understanding of their own assets, but we also need to systems thinking, and whether that's thinking about your dependencies on infrastructure, supply chain, regulation, ecosystem services, and many more. Capital providers, insurers. The report findings were really interesting, and I think it showed some selection bias in the respondents, in that it showed that 50% of our clients are taking action on quantifying their exposure to climate change and nature risks, which I was surprised it was that high a number. Having said that, only 50% are taking a quantitative approach. The vast majority are taking a qualitative approach. 83% are just doing a qualitative assessment, which makes me feel that that's more reporting driven than actually trying to build resilience in the business. The most investment is going to business continuity. And so rather than improving the underlying aspects of the risk, people are making sure that they're able to recover as quickly as possible. And what I found very interesting is that most people are struggling with the business case. How can they quantify both the impact of an intervention and then turn that into a return on investment over a period of years? And it's really easy to shoot darts at the qualities of the model, but kind of, as I think Mr. Obama said during the financial crisis, plan beats no plan. And I think that a lot of people are using the excuse of sort of some flawed tools to not at least have a plan. I think the other thing that really surprised me is the perils of greatest concern. So the peril of greatest concern was typhoon and hurricane. And wildfire wasn't nearly as high on that list as I'd expected. Now, maybe that's because it really was a global survey. And so in the US, I would have expected wildfire to be far more significant. But heat stress is really notching up there. And I think that's one, as an insurance industry, we've been slow to adapt to, because we don't really see damage from heat. It's more of a health impact. So there's some of the findings. But please feel free and go and look at them, marsh.com, and you'll find them easily.
Thank you, Amy. And yes, I think there are some climate hazards that you see in certain regions of the world, but we are increasingly seeing, for example, recently in India or even in Greece, we had wildfires just because of the rise of extreme heat, expanding into places where they weren't so prevalent earlier. So I think we need to learn more and more about how these hazards are having impacts on communities and infrastructure to be better prepared from places that are already facing it. Moving on to Francis. Each of us sitting here today are here to listen to solutions on climate resilience and what is the actual action that is out there. Can you share why this is such an important conversation for Liberty Mutual and your perspective on where finance and insurance needs to be as part of the conversation?
Sure. Thank you, Needy. Happy to be here, Francis Hyatt. So I hope folks know, right, that the effects of climate change have for very, very many years been front and center and experienced by insurance companies. You heard Amy talk a little bit about nature, and she bled a little bit into some of the impacts of climate, but our policyholders are impacted now on a daily basis by the adverse impacts of climate change. And so for us, Needy, we really care that not only our products and services are well positioned to support folks through not only the energy transition, but the adverse impacts of climate, but that we have good risk consulting services in place that help our policyholders understand the specific issues that they're going to be facing. So interestingly, and this is a little bit off script, but Amy mentioned heat, right? So you don't necessarily automatically think about heat from a resiliency perspective when it comes to our policyholders, but the reality is, think about the construction sector, for example, and men and women that are going out and working on site all around the world in extreme heat. And so not only do we want to have insurance products that support them, but I'll give you a concrete example. We partnered with one of our insureds, Turner Construction, and candidly another insurer, to do a research study around the adverse impacts of heat as it relates to construction workers. What does that mean for the construction company? What do they need to do? What do they need from an insurance perspective, and what do they need from risk advisory services or mitigation aspects? That's just one example of many, right? But you can also think about when it comes to the issues associated with resiliency and insurance, that insurance is not just property and casualty insurance, right? You should be thinking about the retail coverage that individuals have on their homes, on their autos. We should be thinking about the surety industry, the impact that the surety industry can have in standing behind building back better all around the world as it relates to infrastructure, right? So often when we talk about the adverse impacts of climate or energy transition, we leap to new, right? We leap to a place where we talk about, well, what are we going to do to make sure that we can ensure solar or wind or hydro or PIC, right? But the reality is climate change is impacting infrastructure, and the adverse impacts of climate, whether it's flood, whether it's storm, whether it's wildfire, and we could go down the list, have an impact on things like bridges, have an impact on things like roads, have an impact on things like energy sector and the grid. Insurance plays a role not only from a products and services perspective in supporting how we build them back, but it also plays a role in how we can offer risk advisory services to those organizations to protect their people and to try to help the projects be more efficient and effective. I also think when folks, we're joined here by colleagues that are in the investment space, so I certainly won't spend too much time on investments, but when we think about insurance companies, most of us have a very large portfolio of assets that are being invested on behalf of our policyholders. In our case, Liberty is a mutual company, so we're owned by our policyholders, right? While there are some constraints about how we can invest, because obviously we want to make sure we protect capital on behalf of our folks, our policyholders, there's a fairly robust tranche of capital that can be invested in things like resilient infrastructure, that can be invested in things like energy transition, et cetera. I think that our underwriters, so when you think about on the commercial side of the business, how we actually assess a risk, our underwriters are more and more bringing the risk advisory lens into the conversation with the brokers that we work with who bring us the business, to actually have conversations with our either existing policyholders or future policyholders around not just the nature of the insurance that they need, but what we would recommend from a risk perspective that they change in order to mitigate the impacts of climate, whether it's heat or flood or storm or earthquake, et cetera. And then maybe last thing I would say on that question is, there are so many products and services that are in place that really are focused in this area of adaptation and resiliency, and it's not just parametric insurance. So often folks leap to this idea that parametrics is the solution, and it is one of many. Amy's nodding with me because I think maybe she should jump in too. She's an expert in this space. So parametrics, for those of you that don't know, is really a trigger-based insurance. We contract with individuals to say, if X happens, if this storm happens, if this damage happens to your crop, if this damage happens to your property, then we pay. It's very, very straightforward. But it's not the only product that we have, and we are consistently looking at products and services to make sure that they meet the needs of what's changing from a resiliency and adaptation perspective needing.
Thank you so much, Francis. And I'll get to your second question in just a bit, but since you mentioned investors, I'm curious to hear from Anjali. Can you tell us what you're hearing from your partners and your clients on where investors are on adaptation and resilience?
Yes. So as Nidhi had mentioned at the outset, I work with the Asia Investor Group on climate change, and since AIGCC is probably not as well known as Marsh and Liberty, I might just take a few seconds to introduce my organization. So what we do is we work with institutional investors. So we work with the likes of asset owners, the pension funds, the sovereign wealth funds, and we also work with asset managers in really building their capacity on understanding and responding to climate change related issues. So as AIGCC, we work with over 70 investor members, both global and domestic, but have a presence across Asian markets that manage over 28 trillion USD in assets. And so through the work that AIGCC has been doing, we focus on several climate themes, one of which is physical risks and resilience. So we have a long-standing working group that's just been sort of growing in momentum and size because of the interest and the markets as well that we work in, right? So through this physical risks and resilience working group, which has been in existence for over 4 years now, initially we've been focusing on really getting investors to understand the risks that their assets and portfolios are exposed to by looking at service providers and tools that they can use to do these assessments. And these assessments are obviously getting better over time with sort of more understanding of what the risks are and how you're able to quantify them, as Amy mentioned as well. And so once investors have this understanding of what is the exposure that their assets and portfolios have, we've been encouraging investors to engage with the companies to really understand at a company level, is there a common understanding of what the risks are? And if that is the case, are we able to develop a resilience plan that investors can really understand what does the company need to sort of build a resilience of their assets, their operations, their employees, but also the communities that surround these companies' assets. So we're really looking at working towards developing these comprehensive resilience plans, which are at quite early stages because of the factors that we discussed on the panel. But I think that is a very integral solution to sort of channel into sort of national and regional level adaptation planning. Because when you really get into it, you realize that companies are also at stress because a lot of these sort of critical infrastructure like roads, power that companies really depend on is not under their control, it's under the control of the government. So there is really a need to work together in terms of bringing governments together with companies to identify how finance can really come in and support that creation of that entire ecosystem on adaptation and resilience. So what we've been doing at AIGCC is we've started investor-led engagements with governments to really understand where governments are at on adaptation planning at a national level and then how that's translated into regional level planning. This is to really facilitate companies' resilience planning being fed into a national level framework to see how you can bring holistic resilience for companies, their operations and communities. And so through these engagements, we're finding really good practices that's emerging across different markets and enabling cross-learnings amongst governments. And I think this is sort of like a way to really unlock projects that investors could feed into, but then also arrive at a common understanding on what these risks are and facilitate larger action. Yes.
Thank you so much, Anjali. Now that you brought up governments, I'm going to pop it back to Francis. Francis, how do you think the insurance industry, but also the finance industry, how can we bridge the gap? Since Anjali was talking about some things that they're doing, how do you bridge the gap between the private finance sector and bringing together at the country level, at the community level? How do you integrate and figure out how to implement these solutions?
Well, we're not going to solve that now, but I have some thoughts, that's for sure. So the whole issue of public and private partnerships and issues associated with funding is critical, right? And not to be overly rudimentary about it, but it really starts with real deep, robust conversations where the corporate community is willing to take the time to sit with public entities to listen to what the material needs are. That's, I would say, the first thing. The second thing is that I do think that we have to put our money where our mouth is, and once we hear what the issues are, so I'll give an example in a minute about some work that we're doing with the Commonwealth of Massachusetts, but we have to be willing to take action and test and learn. So one of the things that I would say is that and this will be a good example of it, is that a big bang approach isn't always the right approach to try to solve these issues when you're talking about public-private partnerships, because what we need to do is not just be willing to put our money where our mouth is, because the time is now, but we also need to be willing to listen and fund test and learn approaches. So for example, in the Commonwealth of Massachusetts, massive infrastructure needs for change that are already very seriously adversely impacted by climate. So dams and bridges that are very, very aged need a lot of attention and need to be replaced. So folks know that there are funds available at the federal level that local communities, specifically underserved and what we call gateway communities in the Commonwealth, really haven't been tapping into. They don't have the resources to tap into them. So we had a thought. We said, well, why don't we figure out where the material needs are with these groups, and then we will fund climate fellows that will be placed specifically at the state level. They'll be managed by the state climate person. And those individuals will be tasked with bringing in between $5 and $10 million of federal assets from grants that are specifically targeting these resilience issues. And so we've piloted with them, right? Because if we went big bang and tried to do this too quickly, you run the risk that one, you might have the wrong people, or two, that you need to refine your approach of who you're looking for. So we've funded 2 and then another 2. And we're already seeing traction with these individuals being managed by the Commonwealth. And so I provide that example as because I think it hits two of the points that I brought up, which is, one, we needed to have a conversation about what they needed. We needed to listen to them first, and then we needed to take action and put our money where our mouth was and say, okay, we're going to fund these individuals long-term to bring this money in. I also think that we can't have the conversation without a nod towards investments for insurance companies, because we do have large investment portfolios that are focused not only on investments in the energy transition space, but we have to identify areas from our impact investing work where we have the ability to put real dollars into communities that are either build back or resilience related. I would also say, maybe as I kind of close out, that it's not always just about money. Sometimes it's actually about creating a forum where we can use the power that we have from a convening perspective or research perspective to get information out to our customers and to others in the financial services area about what the material issues are. So when I started doing this work years ago, we had the idea to create the Liberty Mutual Climate Transition Center with a specific focus on how are we going to drive information not only about the energy transition, but how are we going to make this a convening body that provides research on public and private partnerships and the role of financial services in funding and fueling some of the areas that you talked about. So I'll leave it at that, Needy. Thank you.
Francis. Anjali, we've talked about nature-based solutions on the insurance side. Love to hear how investors are looking at nature-based solutions for adaptation and resilience.
Yeah, I think maybe just Just to start with, because I mentioned that, investors are really looking at the risks that, their assets and portfolios are exposed to. They're also looking at opportunities for resilient solutions. And I think the opportunity side of adaptation and resilience is really sort of a growing space. A majority of the investors that we work with are large public market investors, and I'd wanted to talk about a bit from that perspective, because that is quite exciting and can sort of unlock a large stream of capital, which is relatively like in a development process, but I think it's a very exciting space. So one of our members, GIC, which is a sovereign wealth fund of Singapore, together with S&P, just released a report over the last week that really looked at the exposure of their real estate assets to the different kinds of physical climate risks. And so what this report really found was that around 80% of the companies in the S&P REIT index was exposed to heat stress, followed by drought at 69%, I believe. And so they were just looking at all of the stresses that these assets were exposed to. And then when they were looking at parallelly the solutions that these assets have to sort of take to build resilience, you're naturally finding that nature-based solutions for buildings is the natural solution to these assets, which are most cost-effective. So they did like a cost-benefit assessment, which found that for every $1 that you invest in heat resilience for these assets, you save about $7, which is sort of a great incentive for investors to really look at that as an opportunity for them to really invest in these solutions. So just, I think earlier this year, Gary, which is the Global Adaptation and Resilience Investment Working Group, together with the Bezos Earth Fund, ClimateWorks, MSCI, had developed this report that really looks at how public companies are really diversifying into adaptation and resilience solutions, and they found that naturally around 800 plus public listed companies have diversified into different types of solutions that would cater to the risks that we're seeing across the globe. And so there's a real opportunity that investors can tap by really understanding these risks better and then sort of matching that to solutions that would work across different markets. And the real estate asset is just one of these examples. If you've heard of the physical climate risk assessment methodology, which was developed by CCRI and now has been taken over by the Institutional Investors Group on Climate Change. Their first phase has been really focused on sort of infrastructure resilience options, and their second phase, which is being currently developed, is really looking at how nature-based solutions can actually help in building resilience for infrastructure. So there's a lot that can be sort of looked at. I think the second interesting area that we could really look at is in terms of sovereign issuances. So we're seeing countries like Philippines, and I'm sure it's happening in many other countries across the world, where governments are really looking at how nature-based solutions can help build resilience for some of these risks that they are hugely exposed to. So in the Philippines case, what they did is they worked with the ADB to really look at how nature-based solutions can help in building resilience to flooding. And the Philippines, sort of the way that they look at sovereign issuance is also that they issue sovereign bonds they issue sovereign bonds to sort of translate that bonds into investing into adaptation solutions. So if you do sort of a backed analysis on really how these developments can be integrated into adaptation and then issue that at a sovereign level, that it makes it much more accessible to investors. Similarly, AIIB, the Asia Infrastructure and Investment Bank, had issued a resilience bond last year, which was heavily oversubscribed by the private sector, including a lot of asset managers. So there's a lot of potential that can be sort of opened up to investors, and we're sort of exploring multiple opportunities like that. And to sort of spur all of this along, you look at frameworks like taxonomies, the CRISP framework, which Gary sort of put out as well, to sort of really help investors understand the advantages of investing in these sort of solutions and spur more investments along. So there's quite a lot that can be done. And we're looking at multiple other solutions, but I was just sort of thinking about the most interesting ones for this forum, and maybe we could touch upon a bit maybe later on if there's time as well. Thank you.
Thanks, Anjali. So we have a lot is happening, but now we're going to hear about practical examples that Sophie has been working on. So we've heard from the insurance industry, we've heard from the asset managers and investors. Sophie, you have been working on innovations that are already creating a positive impact for farmers and rural communities whose livelihoods depend on nature and biodiversity. Could you take us through a couple of case studies that you've been working on, or you've already delivered results from, to share with the audience?
Sure. Am I on? Yes, great. So yeah, a little bit of an odd woman out on the panel because we really focus on kind of the micro level impacts of what kind of these risk mitigating structures can do for the, for those people on the ground that are facing these risks every day. I represent a research institution, a group that's funded by USAID, so we're US government funded, and we're made up of a group of primarily economists that look at kind of agricultural economics and look at finance to figure out how we can better understand how to mitigate the risks that kind of smallholder farmers or pastoralists. So we're really looking at kind of the folks on the ground, what can we do to unlock their potential to become more resilient and be able to take up kind of climate adaptive technologies. And so we have several instances where the results of our studies I feel like are really worthy of, kind of sharing at this higher level or broader scale. And one of the projects is, I think, it kind of epitomizes what I hope that I can have you guys take away from this. And that project is one that we've been working on for nearly a decade in both Tanzania and Mozambique. And what we did was we were assessing kind of the complementarities between risk mitigation strategies. So we're looking at both agronomic innovations, where in this case it's a drought-tolerant seed, maize seed, and we're also looking at financial innovations that are going to be able to kind of work together when they're thoughtfully bundled to create a larger swath of risk mitigation for the farmers. And so in this case it was the drought-tolerant seeds. We're dealing with kind of the shorter term, kind of the mid-season drought, kind of more frequent, less kind of catastrophic. So the drought-tolerant seeds were actually quite good at dealing with that. The yields stayed high. And then we also paired it with the insurance product, in this case a parametric insurance product, where that was covering the catastrophic drought instances. And so when they were paired together, you had a more cost-effective way of mitigating a broader swath of risk that these farmers were facing. And what we saw was that, and again, this may be kind of elementary to some of you, but for a lot of us, it was like, well, this is a message that needs to get out there. So what we saw was that the drought-tolerant seeds were great, but when they failed at catastrophic drought, they were kind of disadopted. So the farmers were like, nope, too risky, can't handle this, too expensive. But when they were paired with the insurance gave the farmers the confidence to know, okay, well, if something goes wrong, if there is something catastrophic that happens, I'm going to be covered. And with that confidence and with that knowledge in advance, right, so they need to know kind of ex ante, right, in advance of a bad season or a bad shock, they were able to say, okay, I'm covered, I can take these risks, I'm going to make kind of more risky potentially, but productive investments on farm. And what they did was they made those investments in climate adaptive technologies. They didn't take kind of the standard seeds that they had been using that weren't as efficient. They actually adopted more of the stress tolerant seeds. And so what we're seeing in this case is that the larger message, I think, from that particular project is that the farmers were really benefiting from this combination of seed and finance and insurance. But it was also the private sector that was benefiting. So the seed companies were like, this is great. This is stabilizing our market. This is, differentiating us. We're the ones with insured seed. And then the insurance company, in this case, we were working with Hollard in Mozambique, but they were saying, hey, this is great too, because we're having issues with last mileage delivery. We can work with the seed companies for that. This is, a product that, again, is kind of stabilizing the market for us, expanding the market for us. So all in all, kind of as a win-win, where you had farmers whose risks were being mitigated, and you had private sector who were kind of excited and engaged to be a part of the project. And it's actually being scaled in Mozambique. So we're hoping again that the message around if you can really unlock or if you can mitigate the risks that farmers face in advance, so anticipatory action, right? If you can do that, then you see benefits both across, the private sector and amongst the farmers in a way that can really unlock the potential for the adaptation or the adoption of climate adaptive technology. So that's one instance. I don't know if I have time to very briefly mention it, probably not. So
you can mention it briefly, and then I'll add on your next question as well. If there's something else that you think that, since we're trying to gather examples and action items that you all can learn about from, that the private sector is already doing, but how is that translating into at the community level? So if you can tell us, is there something more that the private sector can do, or there's a policy environment piece that you can talk to in your next example as well?
Yeah, I think generally the messaging would be don't forget the researchers or don't forget the research. Of course I'm biased, that's the perspective that I'm coming from, but these are large companies doing massive, with massive amounts of money to invest, huge projects that are global, but there's really, and I'm not saying that that's not already being done, but to make sure that we continue to prioritize the funding of the ground truthing, like what's actually happening at the community level with these, with these communities that are vulnerable to climate change. What are the needs that they have? How can we meet them? But with data, with research that we can actually, with an impact assessment that really tells us, okay, this project, this investment, this is worth it. This is actually making a difference. And I think through these kinds of projects, the one I mentioned where we actually have hard data to show that when you make an investment in insurance or in seeds and you do it thoughtfully and you put it out there for the farmers that they can mitigate their risks, then you have these incredible impacts where you're seeing not just farmers bouncing back to where they would have been prior to a drought, but because they were confident, because they were making these investments in advance, they actually see a trajectory that doesn't allow them just to bounce back and survive, but it allows them to to thrive, to continue up, and that's hopefully what we want to see more of. So I think that's that would be a point.
Okay, great. So we're done with the formal questions. I think we have time for maybe one or two short audience questions. If anyone would like to jump in. Oh, one in the back.
Hi, I just had a question on the investment side. You guys, obviously, your business is very impacted by climate change and environmental issues, so you know a lot about it. You're a real expert on it. But on the investment side, I know that regulations really constrain how you can invest. You have to take a 25% haircut or set aside 25% if you invest in non-public securities, for example. And a lot of the solutions that we need to see are sort of in the private credit or in the private investment side. And most of the insurance products are constrained by investing only in public entities. So I'm glad that you mentioned the sovereign bonds, but that's really a tiny area. There's a huge area that needs to be opened up to free up that capital. And do you see a way towards getting some change in the regulations that will allow insurance companies to actually deploy capital in solutions more effectively?
Maybe I'll start. Am I on? Yeah. So a couple things. One is, which is very specific to Liberty Mutual, because we're not publicly held, not only do we try to generate returns through our investment portfolio, but we are a big recipient of bond money. We issue bonds all around the world in order to be able to generate capital. And so when you bring up issues like sovereign wealth, or when my colleague was talking about resiliency bonds or sustainable bonds, those are all options for insurers to engage in a fairly non-traditional way in terms of access to capital to be able to fuel the business. And in the reverse, we actually will buy bonds as part of our investment portfolio that fit into these categories. There's no doubt that the regulatory environment is constraining in terms of an investment portfolio. So roughly, what, 83% of the portfolio has to be in fixed income in order to be able to meet the regulatory standards. But when you're talking about a $100 billion investment portfolio, that leaves, north of $20 billion to be invested more flexibly. And I don't know it to be true, at least for us, and again, I don't know if the rules are different for mutuals and public insurers, but we certainly have the ability to invest we have a sleeve of a tranche of our investment portfolio that is much more private, focused more on entrepreneurial efforts that are focused on the solutions that you're talking about, whether it's in the transition space or resiliency space. And then lastly, I would say that investments for an insurance company don't just have to come out of the investment portfolio. At our company, we actually have what we call Liberty Mutual Strategic Ventures, which is smaller money, but different tranches of money that are focused on the nexus of innovative, creative solutions for either insurance, tech, et cetera, that gets at some of these solutions. And just lastly, Needy, sorry, absolutely on the regulatory side, we spend a ton of time with our teams from in DC and around the world trying to influence the regulatory environment to make it more lucrative, both on behalf of our policyholders and to be able to do the right thing for generating capital. Go ahead, Needy. Sorry.
Anjali, did you want to respond as well?
Yeah. Add to what Francis said, because I lead on the policy engagement work at AIGCC, so this engagement that we lead with governments is really trying to bring a whole of government approach in the way that you would look at adaptation and resilience financing, because in a lot of cases, the finance that's required is at a much larger scale than what is anticipated by governments. So once you sort of understand what the risks that you're really exposed to and what is the scale of finance that's really required to meet those risks and projects, you naturally start thinking of solutions from all angles in terms of projects, but then also financing solutions. And we are actually seeing such transformative responses from governments as well. So for instance, in Singapore, we engage quite a lot with the Monetary Authority to really look at how they could actually spur more capital investment into adaptation and resilience solutions. And we hope to sort of bring this to many other markets as well through our course of engagement. Yeah.
Okay, thank you. Okay. I think we are at time, but maybe one last question? Okay, it's up in the front.
Thanks a lot, Rasmus Jacobsen. I work with CARE. So a question sort of to your sort of concrete operational experience, maybe mostly to our researcher. I guess we sort of recognize that the sort of good solution is also sort of a holistic and integrated solution where many of these tools are sort of interacting and playing together. So we have finance and insurance, have to work with governments, has to work with farmers, as an example, have to work with an organization like mine, civil society, and it's often somehow in that things sort of falls between the cracks, and we sort of identify and find difficulties in getting these various and very sort of different actors to sort of act together in an integrated manner. What's your experience? Do you agree, or do you sort of see that that's the case?
Yeah, I think there's absolutely truth to that. That people kind of function in their silos, and it is hard to cross those. The most kind of successful projects that we've been working on are those that we have kind of started from the ground up with partnerships that are locally led. And I think that that's a huge part of it, to ensure that we have kind of those local voices really informing the kinds of, projects and policies that we then kind of scale up to this broader global level. And so I think, for us, working very closely with the local insurance companies, with the local seed companies, with the farmer cooperatives, with the, for example, when we are working with index-based livestock insurance, so pastoralist communities, really working closely with those communities on the ground for a longer period of time, also building trust, building communication channels. Those are the projects, that's the kind of research that really produces the impacts that we're looking for, the data that we're looking for. And so I think, that often gets forgotten, that part where you have to put the work in. You do actually have to, get ground truth and get to the, to that ground level and create the relationships built on trust and, mutual respect. And so I think that, is a part that often people want to skip or kind of jump over, because it does take time and it takes effort and it takes money to be able to create those foundational relationships before you can then work your way up.
May I just add, there are some groups like the Sustainable Markets Initiative, which was founded, I'm going to say 2019, by King Charles, chaired by Brian Moynihan of Bank of America, where there are about 30 working groups across industries, across insurance, across finance, trying to bring those cohorts together to solve some of these wicked hard problems.
Great. I know there are a lot of questions, and I know I didn't touch upon everything that I would have liked to. So all of our panelists will be, you'll catch them maybe around through the day. You can catch them and ask them questions. I'll just one final question to all of you all, very short, very brief. What is the one thing that you'd like to see done? What is the one action that you'd like to see get done this year, maybe early into the next year? But what is the immediate step that you think people should think about, should know about, should take place that will advance the conversation on acting on adaptation and resilience? So, Sophie, since you're already holding up the mic, why don't I start with you, and then we'll come back down this way.
I think I'm going to start. I'm going to be small, not a grand plan, not a world-changing idea, but as I mentioned already, I think just remembering to start at the ground level, start with the research, start with the data, make sure you have kind of the proof of concept before you expand, before you take it global. Because I think if we can really focus on what works, then we can eventually make a difference.
Thank you. Anjali?
I was just looking around the room before the session started, and I realized I don't know anyone in this room, and I feel like that's the biggest strength, right? Like I think we're so used to sort of operating in our silos, and adaptation is something that we've picked up on so late, and there's so much that needs to be done so quickly. So as much sort of cross-collaboration that we can do across markets, across sectors, the farther we'll get to sort of serve everyone that's going to be affected by it pretty soon. So I think that's really what needs to happen in the next few years, and that's what I look forward to doing as well.
Great. Francis?
Yeah, those are fantastic. And I would maybe also take a fairly simple approach to this, which is for those of you that are in business and have a relationship with your insurer and have issues that you want to drive, engage us, bring us into the conversation. And for those of you that are not necessarily in that space, engage us anyway. Invite us in for seriously. Invite us in for discussions around how we can help from a risk advisory perspective, what knowledge we can bring to the table as it relates to resiliency and adaptation. Because I think the insurance community is hungry to be much more engaged in the conversation and in the dialogue globally, but we don't always know who the best folks are to be talking to about very specific issues depending on where they are regionally.
Thank you, Francis. Amy?
So I'm going to go very big and hard, which is a framework whereby we can resolve the issue of the person paying for incurring the cost of the resilience measure, sharing from the benefits of that resilience measure. And I think if we can put that framework in place, then we'll be in pretty good shape quite quickly.
Okay. Thank you for leaving us with that thought. Thank you, everyone, for joining, and we look forward to seeing you throughout the day. Thank you.